Today, I want to talk to you about student loans. Maybe you're a first-time home buyer and you want to have the American dream. You want to purchase your first home, but you're afraid that you can't do it because of your student loan debt. Or maybe you currently already own a house and you either want to move up and buy a bigger one because maybe you had children or something since you purchased your first home, or maybe you love your house, but now you have taken on other debt, credit cards, home equity loans, auto loans, and you just need to work on that cash flow. What we want to do is prepare you because an act had just passed that is going to restart federal student loans. So here we go. So the act, simply put, was called the debt ceiling. Legally put, it was the Financial Responsibility Act of 2023, but you know it as the debt ceiling. So back in June, the U.S. could not make our debt payments, and we couldn't do this because we were reaching the debt ceiling. So in order for the debt ceiling to get increased so we can make these payments, Congress put in the bill that student loan payments had to restart. So here's a quick summary that's going to affect you. They restart September 1st, 2023. Now, many people don't even realize that these student loan payments are coming back, and it's because your servicers haven't reached back out to you yet. Don't worry, they will, but we're trying to get ahead of it for you and let you know what's coming. Now, student loans have been paused for 3 years now, and many people have gotten used to not having to pay these back, and now they're going to have to. We are waking up a sleeping giant, and it is going to hurt. And that's why we need to get prepared right now, because if you want to purchase that first home, you want to move up and purchase that bigger house, or you want to reconsolidate your current debt, we need to come up with a plan now so that you are able to do that. What we don't want to have happen is we don't want you to miss your student loan repayments. Because if you miss paying back these student loans, it's going to lead to lates and defaults on your credit report. And when that shows up on your credit report, it's going to hinder you from purchasing a new home or doing a debt consolidation loan. We want to be proactive with this. And there's 3 things that you need to do. And it's actually a lot simpler than you think. The first thing you need to do is you need to know your options. And that's where we come in. And then we're going to create a plan and execute on the plan. So the first thing we need to do is understanding our options with our federal student loans. Now, this is super simple. I have a great website that you can click on, and it's a student loan calculator. You simply just put in your household income, your student loan information, like how much you owe and at what interest rate, and the calculator is basically going to give us instant savings on what we can do with that federal student loan debt and which programs you can qualify for. Now, that's the first step of the plan, is assessing the federal student loan debt. And then we pivot that into the game plan for home ownership or debt consolidation. Now, we are going to create that plan, and you will fall into one of these categories. You're either a first-time home buyer, you're a move-up buyer, or you need to restructure all of your debt through a refinance. Our goal in addressing the student loans is to regain back some of that buying power. If you don't do anything and simply just absorb these payments back into your debt, it's going to critically hinder you from purchasing the home you want or need, and it could even stop you from qualifying altogether. And this is because of your debt to income ratio, otherwise known as your DTI. Now, if you also want to look at doing a consolidation loan, your student loan payments are also going to hinder you there because of your debt to income ratio will keep you from allowing you to access more equity in the home to pay off your other debts. So the first category was first-time home buyer. Now, this is typically a younger person, and even if you have a $300 student loan payment, that could affect you on purchasing that new home. So that's why we need to take a look at doing that calculation of where you fall and how we can lower that monthly payment for you. And to do this, we're going to do a first home buyer analysis. I want to sit down with you and do this analysis, and we can see where we can lower these student loans to increase your ability to purchase the first home or increase your buying power. Now, the second person was the move up buyer. These are people looking to move up to a bigger house, they're relocating, or maybe they're just right sizing their house. And the student loans can help or can hinder them from getting the home that they need. Now, for them, we're going to do a move up analysis. And this is going to use different tools than the first time home buyer analysis. We're going to talk through different options here, like temporary and permanent rate buy downs, and different ways to use mortgage insurance. And lastly is the current homeowner who has felt the inflation, has taken on some debt through credit cards, home equity loans, auto loans, lines of credit, all those sorts of things. And you need to increase your monthly cash flow. We're going to sit down with you and we're going to do a total cost analysis of all your household debt and see where we can make improvements to your monthly cash flow. Then we just need to execute the plan. We cannot stop these student loans from being turned back on. We know it's going to happen, but we can get knowledgeable about what's going on and we can help put you into a better financial situation. And then we just have to execute the plan. So there's 2 steps to do moving forward. Number 1 is to schedule a meeting so we can help you with this. And number 2, we need you to prepare your financial information, which means gathering together necessary documents such as your income and assets and your consumer debt. Everything that has skyrocketed over the past couple of years from all the rate hikes, we need to get all that consumer debt pulled together. And so we have it to do the analysis. And that's all you have to do. Because managing that student loan debt aids in home ownership, whether it's buying your first home, moving up, or restructuring your current debt. My contact information is located all around this video. And if you would like us to reach out to you, please just click on the I want more information link, put in your phone number and your name, and we will reach out to you.